This is Viewpoints by Hennessy, a podcast featuring the latest thinking from the team at Hennessy Funds. My name is Jay Coulter, and joining me for this show is Takenari Okumura, portfolio manager of the Hennessy Japan Small Cap Fund. He's located in Tokyo, so he will be able to help give us a feet on the ground perspective of what's going on. Let's jump right in. Japanese small caps have been undervalued compared to large caps for the past 3 years. Why is now the time for investors to start paying attention to small cap stocks?
Japanese small caps are trading at very attractive prices at the moment, and I believe there are sufficient reasons why investors should pay attention to small caps. First of all, Japan is now the inflection point from the deflationary economy to inflationary economy. CPI has been above 2% over the past 2 years, and we are able to achieve 5% of wage increase in the spring negotiation this year. So, achieving the virtuous cycle of wage and price increases is more likely. The Bank of Japan's recent decision to raise interest rates is one of the evidence that they are building confidence in achieving a stable and sustainable virtuous cycle of economic growth and inflation. Another thing I would like to highlight is the attractive valuation. From the valuation perspective, it is most undervalued situation over the past 10 years. If we look at the price to earnings of the Topix Small Index, it is currently trading at 13 times. On the other hand, the Topix 100, which is a large cap index, is currently trading at 15 times. Historically, small cap stocks have always traded a premium compared to large caps over the past 10 years. This current valuation disparity presents a great opportunity for investors to pay attention to small cap stocks. This is mainly due to the underperformance of small cap and mid cap compared to large cap stocks. Despite the rapid depreciation of the yen and rising inflation driving up cost, small and mid cap companies have been slow to pass on these costs, which has put pressure to their performance. Now, the situation is changing. These companies are progressing in passing on costs, and their performance growth forecast is now surpassing that of large cap stocks. That's why I believe now the time investors should pay attention to small cap stocks.
So, historically, Japanese small cap stocks have outperformed large cap stocks, just like in the United States. What drives this outperformance?
That's a great question. The outperformance of Japanese small cap stocks can be attributed to several key factors. First and foremost, these companies often exhibit higher profit growth rates compared to their large cap counterparts. This is because small cap companies are typically in the earlier stages of the growth cycles and have more room to expand. Additionally, while Japan is a mature market, there are numerous small cap companies that continue to grow led by unique, company specific factors. These companies often find niche market or innovate in ways that allow them to thrive despite the broader economic conditions. This combination of higher growth potential and unique growth drivers enables Japanese small cap stocks to perform well over time. Moreover, these companies often receive less coverage from sell-side analysts, creating market inefficiencies that savvy investors can exploit. This dynamic is quite similar to what we see in the United States, where small cap stocks also tend to outperform due to their growth potential and market inefficiencies.
So, why does active management potentially have an edge in the small cap space in Japan?
Firstly, there is the issue of limited analyst coverage. Many small cap stocks in Japan are under researched compared to their large cap counterparts. This lack of coverage means that there are more opportunities for active managers to discover undervalued or overlooked companies through their own research and analysis. Secondly, the direct impact of management expertise on company performance is particularly pronounced in small cap companies. In these smaller firms, the decisions and strategic direction set by the management team can directly influence business outcomes. Active managers who take the time to understand the management medium and long-term strategies can more accurately anticipate the company's potential for success. Moreover, the language barrier presents a unique challenge and opportunity. Many Japanese small cap companies may not provide comprehensive information in English, which can deter international investors. However, active managers who can navigate the Japanese language and culture have an advantage in accessing the understanding valuable information that may not be always available to others. These factors combined, limited analyst coverage, the significant impact of management decisions, and the language barrier, create an environment where active management can uncover and capitalize on opportunities that passive strategies might miss.
That makes a lot of sense. Today, your fund is roughly 40% allocated to industrials. Why do you have such a heavy allocation to the sector?
Our heavy allocation to the industrial sector is based on several strategic considerations. Firstly, it's important to note that industrials is the broad category that encompasses not just manufacturing, but also construction, logistics, and other related industries. This diversity within the sector allows us to tap into various growth opportunities. In Japan, there has been a period of underinvestment, which has created a substantial pent-up demand for capital expenditures. This is particularly evident in construction industry, where there is a strong need for infrastructure development and modernization. We find this sector particularly attractive due to the ongoing and anticipated investments. Additionally, the logistics industry in Japan, which was previously under intense competition and deflationary pressures, is now poised for investment. As freight rates adjusting to reflect true cost, we expect profit margins to improve significantly. This presents a promising opportunity for investment. Overall, our allocation to industrials is driven by the sector broad scope, the substantial and ongoing capital investment needs in Japan, and the positive outlook for profit margin improvements in logistics. This strategic positioning allows us to capitalize on the drivers and robust growth prospects within the industrial sector.
Let's close with a discussion about one of your holdings. What do investors need to know about Qdenko?
Kyudenko is a prominent electrical construction company based in the Kyushu region of Japan. During the pandemic, Kyudenko undertook several low-margin projects which negatively impacted its profit margins and led to a period of stock price underperformance. However, we saw this as a short-term setback rather than a long-term issue. We invested in Kyudenko based on our assessment that the company is well positioned to benefit from the robust demand for capital expenditures. In particular, the Kyushu region is expected to become a significant hub for semiconductor manufacturing, with major players like TSMC establishing factories there. Additionally, there is strong demand for large-scale urban redevelopment projects in metropolitan areas. Kyudenko's strong mobilization capacity allows it to effectively meet the increasing demand while improving project profitability. We anticipated that the company's financial performance would improve as it transitioned from the low margin pandemic era project to more profitable ones, secured with better returns, better terms. Indeed, as this higher margin project has started to progress and the older, less profitable project has been completed, we have begun to see tangible improvements in Kyurenko's financial performance, which has been reflected in a rising stock price. That confirms our belief in the company's growth prospects, driven by increased demand and improved profitability.
Excellent. I really appreciate your time for this coming on this episode of Viewpoints by Hennessy. Viewers, listeners, learn more about the Hennessy Japan Fund and all Hennessy funds by visiting hennessyfunds.com.